Hey traders, welcome to Charts and Coffee. Hope everyone's doing great. Awesome to see everyone. All right, so let's take a look at what is on our economic calendar. All right, so let's take 3 calendars into consideration. If you're not already doing it, this type of environment requires 3. It's not that difficult. I'll tell you why each one is important. First of all, Forex Factory, it makes recognizing the high impact, high volatility, scheduled events, we call them hot zones, really easy to see. We had some building permits, housing starts data. Does anyone think those are high? We'll see what happens. If they were a little bit better than expected, we'll take a look at what the market did at 8:30 in response to those releases. Beige book at 2 p.m., crude oil inventory, so kind of quiet. Bullard speaks at 6:30. So probably one of the more quiet hot zone days we've had in a while. However, please do check out tradingeconomics.com. And I think also, let's see, Lorna Bot in the Mastery has been mentioning, what was it, Econo Day? Does have a lot of these Fed speaking events listed as well. And you'll see here pretty quiet on the calendar. But notice here's Evans at 6:30. There's that Bullard speech, and there's Kashkari. So sometimes different calendars will have different speakers. So if all of a sudden the market moves at 1 p.m. and you remember, oh yeah, FOMC member Kashkari is speaking, then you know, 1, to be prepared for that potential volatility, and 2, why it's triggering off, not to mention the bond auction at 1 p.m. as well. All right, so that's the second calendar. And the third calendar I recommend for the fact that we're in earnings season right now. So if you're not tracking earnings with some kind of calendar, it doesn't have to be estimized, but make sure you know not only what's coming out today or this week. That's almost a little too close. I would recommend having a way in which you can track the hot zones based on stock earnings up to 6 to 4 weeks beforehand. And that's why I like estimized, because I can see what's coming around the bend, way around the bend, based on tracking these stocks and knowing I'm 6 weeks out, I'm 4 weeks out. Because I like to ramp up oftentimes into the hot zones. Where is my, oh, there we go. Glasses are dirty this morning. I like being able to take advantage of the ramp ups into these kinds of events, as opposed to when the implied volatility has already made a significant move. And, you know, in terms of what I like to do, which is a directional debit, that is then really not the favored tactic inside 2 weeks as implied volatility increases. Oh, much better. All right, let's get to the questions as always, the best part of our show. All right, so we will kick it off. Good morning, everybody. Good morning. Good morning. All right, first up, Prince asked, is my V profile different from a standard volume profile indicator in any way? Oh, so what's the difference? Sure. So V profile, volume profile, that tool identifies the value area high, the point of control, and the value area low. What makes that different? Look, the only reason I don't know what is on my glasses, it is right in my line of sight. Sorry about that. The what makes it really different isn't that it's giving you 3 levels that are, you can find them almost anywhere, right? Value area high, point of control, and value area low. What makes it different is something that I do with all my volume tools. It's the key to why the accuracy is so much higher. They're anchorable. It's the anchorable, Prince. That's what we're looking at. Is it anchorable or not? And most volume tools roll, and all mine are anchorable. And that's the main thing that I wanted to add to it. Not in any way insinuating there's no other way to look at those 3 levels, but they're far more accurate once you know how and where to anchor. Good morning, Karen. How are you? Is the trend DeLorean a new indicator in the incubator? It's been released from the incubator. Okay, so those of you that follow over at countdowntrader.com, yeah, I think Trish, she writes most of those up for me, knowing my trading style very well. We just unleashed the Kraken. Yes, trend DeLorean. This is the way. A lot of traders have been asking me, Rog, we get that you like to buy into support with weakness, or that you like to short into resistance with strength. It's a fade, right? Which, by the way, is a little bit of an unusual approach because most traders like to buy higher highs or short into lower lows. What I like to do is take advantage of that exhaustion as opposed to momentum. But I finally released a momentum indicator. Yes, and that's my my momentum setup. One of the keys that I have found to a momentum setup working well is the inclusion of volume. And that's what the Trendolorian does. Not to mention, I just had to have an indicator called Trendolorian. So that is what it does. It's a momentum based, yet we are looking at possibly that's what the indicator tries to do, find the beginning stages of a trend when the momentum starts to kick in. So that's what it is. So we've released it from the incubator, from Raghee Labs. And most things stay in the lab at least anywhere from 8 to 10 months, at least, and is tested within that time. And so, yes, it's finally been able to manage multiple seasons of the market. It is an intraday indicator, but I believe, but we actually have that for end of day too, right? And I'm looking at my chat with bot. I believe that one is intraday and end of day, but I use it mostly intraday, but it works really well end of day as well. Just fewer signals, end of day. So she says, yep. So both time frames. All right, next up, Mr. Walker. Oh, it's cold? Oh gosh. Yeah, you don't need to know what the temperature is in Florida. Although it's a little cool for Florida, but I won't say what. Okay. How can I determine an entry trigger? Is it personal preference? It's price, it's volume, it's levels. So an entry trigger is oftentimes, for me, right? And for, I think, any trader, the trigger is, where is your trade valid? So it answers really what is a simple but not so simple question. At what point is your trade, and point would mean in this case price, at what point is that trade valid? That's the trigger. It could be the trigger for an options purchase. You know, we do a lot of futures options trading. We do futures trading. We do options on ETFs and options on stocks. But usually, let's say I want to buy calls in the SPX, or let's say I want to buy puts on the QQQ or the NASDAQ futures. There's going to be a singular trigger that makes that option also valid. So think about what makes it valid. That's your trigger, my friend. Thank you for the question. Nikolai, good morning. Can we go over the seasonality for wheat and natty? Yeah, why not? So let's pull up wheat. One of the things that's really important when we look up seasonals is that we detrend them, especially if it's a seasonal on something related to the stock market, where there's a general, when you step back and say, look at a log chart of the stock market, it just goes up. So if you're looking at the S&P, NASDAQ, Dow, Russell, really any stock index, you've got to detrend it. Probably not as important for commodities, but it's really important that you detrend and debug when you're looking at seasonals. Anyway, with that being said, we're going into a fairly choppy part of the year. Nikolai, these are tendencies, obviously not trades. It does not mean we may not be able to escape that range, but that's the general tendency. Chop in natty. And then when it comes to, chop in wheat. And then when it comes to natty's interesting because remember, the run up for the expectation for winter demand starts in summer. I mean, winter is a fairly foregone conclusion, right? How severe it will be is not. So if we have these little blips to the upside in winter, it will be on storms, which we cannot forecast this far ahead of time. But the run up in natty happens in summer. So you can see once winter is here, it starts to move lower because the run up has already occurred. And the other thing to remember is, for me, the EIA releases something called heating degree days. If those move higher, then we also know that natty should see a little bit of demand. And that's usually what will move natty come this part of the year. Thank you for the question. I like looking at seasonals a lot. Thank you. All right, next up, Al asks, let's see here. XOM. All right. Is Exxon's exiting Russia clickbait or viable news? I don't know. That's I don't know. I haven't really, one of the things that I am interested in anytime there is news. Al, here's what I would tell you. So I don't know the answer to that, but I can give you the process that I'll go through. If you have a narrative, Exxon exiting Russia, Google it. Not because I necessarily want the analysis that Google's going to yield, but go back and look at the date of each mention of that narrative. And not even what it means, but go back and see how old it is. How long has it been oftentimes in the merry-go-round of the news cycle? And then you'll get a pretty decent idea if it's really more discounted or not. Right now, I'm looking at Exxon, and it's pretty much staying steady with where it's been. So I don't know the answer to that. However, I will say that search and then price should dovetail and give you a far better idea of the impact or the lack of discounting thus far. I hope that makes sense. All right, next up, keep the questions coming. Awesome. What time do I anchor my V profile and why? Prince, it depends on, frankly, which session I'm trading. So my anchor for Asia is going to be different than my anchor for Europe. My anchor for V profile is going to be different than my anchor on V profile is going to be different than my anchor for the US session. So since you have V profile, I'm assuming in that purchase, you have likely a cheat sheet. I believe the cheat sheets are available. I call it a cheat sheet. It's just it's a simple reminder of where the anchors go. You can check that out in the rooms. And then anytime you buy an indicator sans a class from me, we still give you some instructions on how to use it. So check that out because it does depend on what you want to measure, right? The anchor is going to depend on what you're going to measure. So check out it's a PDF. I believe you'll see it in the futures room. I know I think it's in the mastery. I'll have to double check. And then where, with the indicator itself, I believe comes with that sheet as well. Check that out because it goes over how I anchor timing wise. What are the considerations for volume weighted average price, an anchored VWAP, anchored V profile, and the anchored V score. And it does change. It does change. In fact, it changes because the nature of volume and volatility changes. And there's a big part of volume and volatility that is the reason for the start point of those anchors. So when I first created V score back in 2008, I anchored it a specific way. Fast forward to 2022, I am anchoring it a little bit different based on the market behavior. So those are things that they're not going to change the settings of the indicator. Look, gang, settings of an indicator should never change. And if they are changing in terms of a price-based indicator, not volume, not volatility, but a price-based, then it's being curve fit. And that's okay if everyone's got to learn, right? But when it comes to volume and volatility, those do have to change. And because the nature of volume and volatility is always changing. That said, check that out. And if you have any other questions, you know where to find me. All right. What is my suggestion on risk management? First of all, I know this sounds obvious, but A, have it. Most traders don't. And I love that you're asking the question. B, so if A is have it, B is what is the maximum allowable risk to your account? What's the most amount of risk that I will allow to my account? And I would have a different threshold for day trading versus overnight trading. So the moment you take something overnight, there's usually going to be a larger amount of risk that you just have to be willing to take because a trade can move more given the time of days or weeks or even months. Intraday, I don't necessarily want to risk as much as far as a percentage of the account because it's not unusual. For example, in the mastery room, we might have between 9:30 and 10:30, somewhere between anywhere 2 to 4 setups. And here's another thing to think about too. Let's say I'm in the S&P and the NASDAQ. I really should reduce the position size and the potential risk to the account because mostly if one stops out, so is the other. And if one hits the target, probably the other will too. But this would extend to individual stocks that are heavily weighted within the indices, as well as sectors. If I'm in XLE and the S&P, a little bit of an overlap, but not a lot. I mean, Exxon is heavily weighted within the S&P, so I got to keep that in mind. If I'm in XLE and the NASDAQ, those are two very different corners of the market, and they're not going to necessarily affect each other directly, although broad risk appetite or risk aversion will affect it, but I don't have an overlap in terms of holdings. And those are oftentimes risk management considerations that a lot of traders don't think about. We know to have a certain risk to our account. That's going to dictate the number of contracts, and we know that each position should have a certain threshold of risk. But a lot of times, the most overlooked part of risk management is, what do the culmination of my positions mean in terms of risk? Because NASDAQ and Apple and XLK, they're the same trade. Very rarely is one of those going to do one thing and the other two don't follow along. So, look for those places of overlap. And also, I think the last point on risk management would be, make sure you don't have an upside down risk reward. Remember, your win rate, if you have a risk of 1 and a reward of 2, is far different if that were flipped, which is a risk of 2 and a reward of 1. Your win rate has to be dramatically higher when your risk is greater than your reward, which is, just generally speaking, a bad idea. You don't want to have a super high win rate. You just want to be able to enjoy a high win rate, not necessarily need it because of an upside down risk reward. So I guess another really basic thing is, don't risk more than you can make. All right. A couple more things before we wrap up. And let's take a quick look. I mentioned we would look at the 8:30 hot zone reaction. Again, one of the questions that I get a lot of is, are we still in a good news is bad news environment, etc. Always ask the market. And what that means is, when we get news that looks on the surface as good news, what's the reaction on the indices? What's the reaction in the treasuries? What's the reaction, say, in the euro or the US dollar? And right now, not much of a reaction to the 8:30 hot zones. You see that there? Not much at all. I will say, and this is going to affect us in the Sector Secrets Mastery. I'll be there in just a minute, gang. We have our morning of day trades coming up. We are, gang, inheriting a downtrend in the S&P this morning. We are inheriting a downtrend, intraday downtrend, in the NASDAQ this morning and in the Dow. All right. And in the Dow, that means the 8, 13, 21, and 34 indicating the path of least resistance is down. It doesn't mean that we're going to have a down day. It simply means when the bell rings in about 11 minutes that I am not allowed to buy. And that's one of the first things we do in the mastery. We determine where the directional bias is. We determine which direction, long or short, or long calls or long puts, is going to be the best match for the current underlying environment. And if you want to learn more about the way that I day trade and swing trade, and even the way we add positions to the longer term portfolio, come check out what we're doing over at Sector Secrets Mastery. Last thing, gang, next Tuesday, it is right around the corner. I'm looking at the calendar here. Next Tuesday, October 25. I haven't done a webinar in a bit. We haven't done one since summer when I was talking about day trading, and everyone knows how well the day trading's worked since summer. So I'm shifting gears, and it's time to start looking at volume, gang. So on Tuesday, did I say Wednesday? It's Tuesday, October 25, 8 p.m. Eastern. We're going to talk about volume, and not volume necessarily in the way that I think most traders are probably looking at it. And a lot of the questions here on V-score, V-profile, you're going to find, I think, a lot of those missing pieces as to, well, why isn't the market breaking down through the June lows? It's volume. Why did we bounce the way we did in 2020 after that sell-off, that pandemic triggered sell-off? It was volume. When we're trading intraday, how do we know we have an edge? A lot of times it's volume. All right, gang. I'll see you all tomorrow, same time. Actually, no, I take that back. Oh, heads up. No charts and coffee tomorrow or Friday. I'll see you all on Sunday. Okay. So I'll see you all on Sunday. No charts and coffee tomorrow or Friday. I know these are probably the first two shows I will have missed in about 2 years. But anyways, thank you so much for being a part of the Caffeinate and Dominate crew. I will see you all Sunday, 6 p.m. for the market reopening for our weekly Raghee report. Be good to each other, gang. Until then.